Atlanta Fed predicted the negative GDP growth for the Q2 in US economy, and if it's true, then it means we are already in a recession. What is recession and how you can be prepared for what's coming ahead of you? So in this video, we are going to talk about that. So let's go. Alright, if you're new to my channel, my name is Yasin Nizami and I make these videos to educate you as a common person about real estate market in Canada, some macroeconomics, some money matters, how the financial system works, how the global monetary system works so that you can make educated decisions about your financial well-being. So if you are interested to learn more, don't forget to hit subscribe and share with your friends and families. Let's go back to our topic. Last week, Atlanta Fed published their estimated GDP numbers for this quarter, which is minus 2.1%. Typically, their estimates are very close, but again, we have to wait until the final Q2 numbers are published at the end of this month. If it happens, then this is going to be a consecutive quarter with negative GDP growth in the US. If it happens, this means we are officially in the recession. In my opinion, the US economy is already in the recession. We just haven't declared it officially because by definition you have to have two consecutive quarters with negative GDP growth. But if you look around, you can see the amount of losses that we have seen in the economy, especially in the US economy with regards to the S&P index, how much value it has lost, crypto space, how much trillions of dollars it has lost, NASDAQ, and typically the US real estate market is also slowing down and pricing are coming down. So combine all of these losses together, this is more than what we have seen in 2008 financial crisis, way more than that, and also more than what we have seen in March 2020. So within the scale of those losses, it can easily be said that we are already in recession. Now, what is recession? Recession means less economic growth, less economic activity, which leads to less spending. If there is less spending economy, that means there will be less investment into the business, less job investments and opportunities in the economy. So remember that one person's spending equals the other person's earning. If one person is not spending, the other person is not earning anything. So when you reduce the spending, you are actually suppressing the earning opportunities on the other side of the equation as well. So which leads to job losses, insolvencies, bankruptcies. In reality, this is going to be a bad economic condition going forward. And people who are kind of wishing for a recession so that they can buy cheaper property, remember that if it happens, you won't even have a job to qualify for a mortgage, because when the recession comes, it comes with major economic pains, job losses, insolvencies, bankruptcies. The monetary condition will be much tighter, even though the central bank will drop the interest rate to stimulate the economy again artificially. That doesn't mean the lenders will also lend money on easier terms. That the terms will be much tighter because the risk element is much higher in that economic conditions than previously. So the whole purpose of this video is to educate you as a common person that this is coming. Like, there is no hiding, guys. Every single asset class is being beaten to death. Stock, bonds, gold, silver, precious metals, they are also getting a lot of beatings, crypto, and now real estate as well. So there is nothing to hide your cash into any of those asset classes. Typically in the previous times, we saw if one asset class goes down, for example, the equities goes down, you tend to balance this with the precious metals like silver or gold. If you talk to any like hedge fund managers, they typically apply the rule of thumb like 60-40, where 60% is your equities and 40% is your bonds. So bonds and equities tend to balance them out, offset their losses. But right now, the situation is very unique. We're seeing everything is going down, everything is getting beaten. So that is a unique economic environment, which I think is very, very, scary, and maybe this will last for long. Who knows? So the whole purpose of this video is to educate a common person to make sure you get prepared for that. Right? This is happening. Like, this is no conspiracy theory. It's all happening in front of our eyes. So you be prepared for that. Make sure you have liquid cash available for rainy days, and don't spend on unnecessary items. Don't spend on cars or vacations or any things that you don't need right now. Keep your spending under control. Don't over leverage that yourself, because there is a massive deleveraging happening across the world, and things are very, very tight monetary wise. And central banks must control inflation. That's their number one target. They must bring the inflation down no matter what. They don't care about your stock portfolio. They don't care about your crypto portfolio. They don't care about your housing wealth value. All they care about is the inflation is rising month over month. They must bring it down to the required levels. And of course, they have to monitor the economic activity. If it is going to damage the economy and has major repercussions in terms of future growth, then they may have to think about it to control the rate hike. It doesn't destroy economy at a larger scale, but we are way far from it. I think right now their whole intention is to bring the inflation down, and for that they can continue raising rates, and that will destroy a lot of wealth in the equity markets, bonds, crypto already got a lot of damage done, and then the real estate market will also get a lot of pressure going forward. So be prepared for that. Make sure investment choices wisely, and don't overspend. Don't over leverage yourself. This is the time to save and protect your purchasing power as much as you can. If you want to buy something, buy that is going to be that you can easily liquidate, like gold or silver, that you can easily sell and then get converted into cash. Or if you want to buy stocks, buy high dividend paying stocks, so that can still keep generating some sort of a cash value out of it. So hope this is helpful. If you like it, give me a thumbs up and share with everybody or anyone who you think should learn about this and know about this, because I think a lot of people are not fully aware of what's happening in the financial media, because financial media is full of jargons, and it's not easy for a common person to understand what's happening behind the scene. That's the whole purpose of this my video. Let me know what you think. Put your comments down below, and I'll see you in my next week video. Take care.